get this recorded. So first things first, guys, everything, we do, and as I was previously saying, this week's been a bit crap. Okay, fundamentals, looking at the previous days, we didn't really have any USD news. We had CAD, red folder news, things like that. We did get USD news on Monday, but not really a lot went on. Or we did get the liquidity grabs, but nothing clear kind of played out. But as of today, no USD news. We did have some pound news in the morning. We've got some news coming up tonight, red folder, NZD news. So price action looks okay. But today was really the best trading day, and there were two setups really that I want to kind of go over. But first things first, guys, if I do start to lag, just let me know. And if I do disconnect, I'll get it on the iPad and I'll get this session up for you guys. So hopefully that's all good. So yeah, as always, guys, look, we can see here today, what did the daily candle do? Okay, so price is obviously, in the last couple of days, we've kind of been working on an inside and outside day. So what I mean by that is, like, this is the previous day on one of the days. So I think this was Sunday. And then we had this high and this low. And then with where this bearish candle here, that high didn't reach the previous day high. This low didn't reach the previous day low. So what happened after that is, this is the previous day high, this is the previous day low. But because it's an inside day, what you need to kind of still do is still take into consideration the previous days from that as well, because that is still going to be resting liquidity. But you can see that yesterday's price action didn't take the lows, so there's still resting liquidity here. However, it did go for the highs. So it took out previous day highs of both days. So really, really good. And then ended up closing. Now, when we see the candles kind of close, that does usually give you an indication that price is going to start to raid lower side liquidity, which is obviously going to be targeted right here. So that liquidity there is something to be wary of. We've obviously got the low of liquidity here as well. Today's price action went higher, came low, and then obviously has started pushing to the upside ever since. But if we kind of go back down to a smaller time frame and we have a look, what you'll see of this week, and the reason this isn't looking very clean is because this week has really been consolidating. Okay, we have been in this state of consolidation all week, or the previous weeks as well. Looking at what we've kind of got here as well. This represents 2 weeks worth of price action. So nothing really is kind of happening at the moment. But if we go down again, what we need to try and figure out is, how are we going to get intraday setups? How are we going to get on setups every single day? So the two setups I've got really to show you is very different situations. Okay, and very different time zones. This one came in London session, and I'm going to show you the US 500 trade, which came in the New York session. Okay, so first things first, when you're on an hour time frame, it's really good to get the sessions indicator on, understand where you are, because what we can see is that price is looking like it's going to drop. So if you're coming onto the charts, doing your 7 o'clock grab, we need to, let me just replay this. Let's jump this as if we're almost coming onto it in the morning. Okay, so let's say we're looking at the charts now. Let's see what Asian session did. We have consolidated. Okay, now we've ended up consolidating where, and price is continuing to dump to the downside. Now, where is price potentially going? Okay, now this liquidity here represents the previous day low from 2 days ago. Okay, so this is still relevant because it hasn't been taken out, because the previous day, which was yesterday, didn't manage to take it. So, we've got areas to come and get coming down here. And what I can see on this 1 hour time frame is that, we did kind of break structure on its way down. We did, if you don't class that as a break of structure, this is definitely a break of structure with this price action pushing down here now. Now, where could this price action possibly be going? Well, obviously, we can look to target this liquidity here. That's absolutely fine. But also, price might not go to this liquidity, because this is an institutional candle. And I've spoken to you about institutional candles, FU candles all along. And looking at price action here, this could very easily be seen as a bullish momentum to take price higher. So price really can turn at any point because we're inside this imbalance. We are, heading towards this institutional candle. We've got this liquidity to come and grab. Okay, if I measure the entire range, it is within our discount level. So it is in an area where it can turn at any point. If I turn on the updated fibs, we are well within our kill zone. So anything can happen in here and we can anticipate price to reverse, but it's not reversing. Okay, so price isn't showing us any kind of reversals. Now, when you're coming down, you can see this is the 7 a.m. grab. What's really kind of important is to kind of pay close attention to what is going on smaller timeframes. Okay, from a higher time frame, this is where we want to see price go. If you're trading early London session or you can't really get to anything, it's ideal to wait for price to get here. But when we're intraday setups, price might not respect this area. We have got to take into consideration this liquidity as well. So, having a look at this and seeing really what's going on. So if I kind of just let this play out a little bit, you can see that price starts to do something like this. Now, once this happens here, okay, there's a couple of things to take into consideration. Okay, so first things first, the liquidity we took, that's the first thing. Okay, so let me just go to a higher time frame. That there represents, previous Asian session, definitely. Previous sessions from yesterday as well. So that there is taken out the previous day low. But we're not looking like we're reversing. So, two things could happen here. We could start to push from here, but that would be overall risky because we've still got areas we can come to, like this 1 hour candle down here, this liquidity down here, for example. So when you see price react where it does, it's not happening for no reason. Okay, this was a very aggressive expansion to the downside. And the first thing it did, it came down and you can see that it's kind of making its way lower and lower and lower. And then it hits 7 a.m. London open, big push down. Okay, big push down. Now, in this area, once we took this liquidity, this line represents your liquidity. We aggressively did it. Now, I want you to pay attention to this second candle here because this candle created this imbalance. This is showing you that we are aggressively seeking to take out this liquidity here by creating this imbalance. Once we create this imbalance, price slowly comes back into this area, slowly approaches this area, fills it almost completely. Really, really amazing stuff here. And then another aggressive sell-off. So you've got a couple of options. For me, it's an indication when stuff like this happens, it's pretty bearish. Okay, it's pretty bearish. So where and how can we get into the market? So, one or two things you can do. You can set an entry right here if you really want to, targeting maybe this area in here. That'll be via 3-to-1, or we can wait for evidence. It's completely up to you. That's valid. Okay, the aggressive sell-off, we stole liquidity here, we hit the imbalance, we stole liquidity to your left. So this is kind of an indication that London session should carry on selling off, and we're actually going to come back and mitigate. And we're now approaching kind of the 10-to-9 mark. Now, price then starts obviously reacting. Now, if you had have taken that, I think it would have been touch and go, to be honest, whether or not you would have been stopped out. Yeah, so really depending on your spread, you probably would have been stopped out there. However, let's see what happens if you potentially wait for some kind of entry. Now, I go over the perfect buy model, the perfect sell model all the time. This here is a perfect sell model. You might not be able to see it straight away, but you can see that price comes up. So if I go back to this 5-minute zone, I'm just going to put a line on that FU candle because the FU candle swept this liquidity, filled this imbalance, taking liquidity, then drops, continuing this structure to the downside. Price comes up, very aggressive push here. Okay, obviously bit of manipulation coming into London session. You would have been stopped out by the looks of it if you had had a tight stop loss. But what happens straight after? Price aggressively sells off, breaking all of this structure right here. So structure break. We've also got another liquidity grab, and this is important. Okay, another liquidity grab. We've got this area right here in terms of this order block, and we've got this imbalance right here. That is a pinpoint entry. Okay, you can see that it literally tapped straight in and then dropped. So, you know, a couple of options for your entry. You can set it straight in here. You can have your stop there. Targeting that 1 hour candle gives you a 4-to-1. Or to be conservative, you know, you could bring your stop above here, maybe round it out to 12 pips. That would give you a 2-to-1. Now, that's not ideal for risk reward ratios in 2-to-1. However, if you do this once a day, 2% a day, 10% a week, you can quickly add up the math, especially if you're a 6-figure funded trader. Now, if you really wanted to, you know, you could see price obviously starting to reject. You could have, you know, I probably would have taken profits. I didn't take this trade, but I was kind of observing. But, you know, this trade kind of played and then started rejecting. You could go break even, or you could take profits. Naturally, I would have probably taken profits, but my stop would have been around here, or possibly a little bit higher, something like that. I would have realistically been looking to get a 3-to-1. But if we look now, what price ended up doing, I'll try to speed this up. You can see here, price carried on moving lower. And then, where's it going? Straight away. That there, and remember, there's your liquidity. Previous daily low from the previous area. Okay, so you've taken a pretty, you know, you can call it high risk sell if you want, because overall you could argue with bullish and all that kind of thing. But what have we done, guys? We've taken everything into consideration. You know, 5-minute, we're bearish, very bearish. In fact, 15-minute, we're very bearish. We've filled this imbalance, which swept that liquidity, which caused that liquidity grab. We've broken structure to the downside, or continued structure to the downside. And we've waited for our evidence, and it has displayed the most perfect sell model. So there's a big myth about, oh, it's high risk, it's high risk, it's this. We've taken everything into consideration here. I mean, if you held on to that, to the liquidity there, that's an 8-to-1. If you were conservative with your 12 pips, that's nearly a 4-to-1, nearly a 5-to-1 there. And it's just by focusing on what this is all doing. Okay, if maybe you would have looked to take your entry here against the candle, but at the same time, you know, I'm only really doing those on higher time frames, maybe 15-minute time frames, if it's more of an intraday / swing setup. But for these quick setups, I want the price to hit me in the imbalance. But another thing, guys, as well, because I see a lot of people get confused about this on the Discord, or not confused, that's the wrong word. For me, imbalance has to hit realistically, like this has to trigger me in within at least 3 candles. And the candles have to be flirting with the imbalance. So what I mean by that, if price breaks just like that and leaves imbalance just there, I want instant entry. Okay, what I don't want is to see price action doing that and then doing that, because then suddenly there's going to be more imbalances. And if price starts doing this to come back into here, yes, it could play out. However, what can we see down here? Accumulation. So this could be an accumulation to take price higher. I don't want to give price action a chance to accumulate. I would rather hit the imbalance straight away, take me into my entry, take me into some profits, because 9 times out of 10, you're going to get some kind of rejection, which is going to give you a better chance to go to break even quicker. So if worst case does happen and we start reversing, you're probably going to be break even by then anyway, which is going to severely, you know, decrease you. It's going to really help you. Tian has asked, so if it's smaller time frames, you don't necessarily have to wait for 50% of the imbalance to fill. No, not at all. Take it like literally. This here is an entry. We've literally tapped into the imbalance and dropped. Okay, we've tapped in, and this played out at not 9:10. This doesn't, you know, randomly, this is 9:10. This is London session. This could happen at 10 o'clock in the morning. It could happen at 11 o'clock in the morning. I'm talking UK time. And we are going to do the New York play as well, because that's a good thing. Today's giving us some really good opportunities, both sides. So, you know, looking really, really good. But, you know, looking at what price kind of did here, you know, that there is your perfect model. You know, what one thing as well I'm going to kind of add to that is when price action creates this liquidity, let's call it a perfect situation where we've got this liquidity here. If, okay, we get, let's pretend this is 7 a.m. Okay, if we suddenly start getting price carrying on to reject, I need to see on my smaller time frame another liquidity break. Okay, I need to see another liquidity break just like that. I need to see an immediate liquidity break after my liquidity break. So with everything you've got to be thinking all the time is liquidity. So on the flip side as well, if we do come lower and then we start to reverse, what can we see here? Okay, we can see we've swiped liquidity here, but also we've swiped liquidity here for our entry. So that's kind of a better view. And, you know, same from the upside coming down as well. You want to get this liquidity stolen, then an aggressive drop, and then an immediate imbalance fill. You want to be in there straight away. This is why I have a problem, or not problem, but I have trouble sending it to you guys straight away, because if you think this candle comes in and I've got a minute, I'm working out my stop loss, everything like that, and suddenly it's in, it's triggered. I haven't got time just to go straight into the Discord and give you precise entries and things like that, which is why sometimes in the alert channel, I'll say 1 minute selling balance or buying balance or something like that, if there's something that's popping up. Okay, so they're the type of things we can look for. But then, you know, look, we can, and look, once you're in this area here and you're playing with an entry and things like that, you know, once you've played out, you don't need to be hanging around on the 1 minute timeframes, because it can get a little bit too confusing, especially if we haven't got a bias anymore, because we've taken out target number 1 and then we've gone for target number 2. We should be out of this trade 100% by now, whether you took it here, whether you took it here. So, you know, then we can go on to higher timeframes. We can see what's going to happen. So, you know, playing it out, we started to reject. And, you know, what can we see? Price action, you know, done its thing. You can see there on a 5 minute time frame. Even on here, you don't have to be trading on smaller time frames, because I'm pretty sure we didn't actually get a 1 minute time frame price action on here. So I'll have a little look on here. But, you know, looking at what happened. So now we're going to look at the 130 grab. Okay, so the 130 grab. Now, this is another interesting thing, because I'm always saying about taking liquidity. So we can take this liquidity here and we can target this liquidity up here as well. However, okay, price taps back into this area here. Now, we shouldn't really need to come for this liquidity. It's creating more liquidity, don't get me wrong, but a lot, this drawdown by taking out the previous daily low from the previous day, sorry if that doesn't make sense, so 2 days ago's liquidity, we shouldn't need to come here, because that would have taken out a lot of stop losses. So price has obviously started reacting straight away, broken structure, come back down, but also we've created a lot of liquidity here. You know, the banks, the institutions, they've taken plenty of liquidity. If there was news and high impact news, I would absolutely have hedged my bets towards thinking that we probably would have taken this. But then look, we started reacting and then we started pushing. That gives me an indication this liquidity here isn't going to be taken today. But even on a 5 minute situation, look, you price aggressively broke, creates this imbalance right there, and we come in and fill it straight away. Now you're in drawdown for a little while in here. You have to endure that, and you probably have a big stop loss if you're setting them on a 5 minute time frame. But listen, these areas work. You don't have to be doing them on the 1 minute every single time. But if we do go to a 1 minute, I'm just trying to see where we could potentially have got an entry. I haven't actually looked at this yet, but you know, look, we come in, we sold this liquidity, we started rejecting. You know, there's nothing really on here at the moment. Okay, now I know a lot of people who will take this entry here, and there's one on US 500 as well. Okay, so we came in and then we rejected straight away. We expanded to the upside. Now, this for me, and this is my opinion, okay, this imbalance for me is high risk, because yes, it played out. I mean, you would have had a mental risk reward if you'd have taken it, stop loss there. I mean, it would have been mental. But for me, I want to see price break above here, because that's the high, that's the low. The reason I do that is because what's to stop this imbalance fill? Let's say you take it, you get triggered. What's to say you're not just going to reject from here and carry on in this already bearish structure? So that's why I class these as high risk. I like to see price close above. The issue we've got now is for our re-entry. Okay, price has swept above this area here. And price has, rejected, hit this area here, started pushing higher. Great. There's not really an entry for me at the moment. This imbalance, too much has happened for me to get into this imbalance, which sits right here. This imbalance has already been filled. So I'm not really interested in anything at the moment. Okay, I'm not really interested in anything in there because we're just creating liquidity. The more candles that start to fill, the more reason price is going to come lower, sweep liquidity. So if you see more candles, you're going to get a nice little rejection, which is if you go back to this 1 minute setup, you look here, there's like 1, 2, 3, 4, 5 candles involved. Really, really clean price action. Compare it to this. I mean, I'm not even going to count those. There's probably about 15 candles, 20 candles. It's just a complete mess. And this is where so many inexperienced traders get confused because they're trying to pinpoint and force entries inside here. And this is what I've been seeing in the last 2 days. That's why I've not been taking trades, because it's just crap. You don't want to be involved in this area. You want to wait for a big expansion like this. Then you can start getting behind it. And that's why, for me, I'm looking at a 5 minute time frame because, there's imbalance here, there's imbalance here, there's imbalance up here, just about. So let's go up to a higher time frame and then see if we can get ourselves an entry. Or, alternatively, you can take it straight off the institutional candle right there. You can see price pushing higher from here. Alternatively, I've just seen another little entry, which would have been good. Okay, price pushes higher and comes straight back into this imbalance. Now, the reason I would support this imbalance, and again, I get this question a lot, because there's imbalance here. There's also imbalance here as well. However, this candle here is going to give me the support, knowing that price is not going to come any lower. So that candle right there is supporting that imbalance, coming in and giving you a nice entry. So you could have your stop loss below here, knowing it's not going to tap to that imbalance. Price isn't interested in this imbalance. We've expanded, we've left this imbalance, and we've gone to the upside. It came at 3:30 as well. Really, really nice entry. And you could have easily got in there. Where would you be targeting? All the liquidity up here that hasn't been taken yet from our range created from 7 a.m. to 1:30. This is just every single day. Look, I found one entry, a 5 minute entry, a 1 minute entry. It's 3 entries on one pair today. I mean, I wasn't trading actively on NAS today, but this is the sort of action when you get a good trading day and it's all just clean and it all just makes sense. You can really take yourself to the next level on this. And this isn't just any indice, any pair. This is anywhere, any indice and any Forex pair this can work on. You just have to really get to know your pair, really get to know its characteristics. And you can see price pushing higher. Again, price rejects, say, this imbalance, little bit of drawdown comes into here, price pushes higher. I mean, I don't even know where price is at right now, but huge amounts of bullish movements to the upside. And it looks like it's obviously going for these areas here. So if I come out of this replay mode, where are we right now? Yeah, nice and high. Is that making sense so far, guys? Can you kind of see the narrative behind it? I'm going to show you the US 500 one as well, which in my opinion is actually cleaner, but really, really good stuff. Okay, really, really good stuff. And it goes to show as well, guys, you can do it in London session, you can do it in New York session, you can do it in the overlap, you can do it anytime. It's just about waiting for that liquidity grab. You look here, this price rejected, swept below the previous daily low from the day before, and then started pushing higher. So I'm not a betting man, even though we're traders. Everyone thinks we're gamblers. We're not. We're working with our probability and our edge. My guess would be the next target is probably this liquidity here, which is going to be previous day high. I said this before, guys, and I'll say it again. Previous day highs, previous day lows, so important. They are daily targets. Okay, they are daily targets. So moving on to my favorite pair at the moment. Okay, very much. And guys, by the way, if you do have any questions, please ask. Okay, but looking here, guys. Okay, we had this inside day here. So this is day today. This is yesterday. This is Monday. So from Friday, we created this high, this low. We did not reach that daily high. We did not reach that daily low. This was an inside day. I didn't trade this day. It was really boring. Okay. Yesterday's price action, we came in, we mitigated against something in here, wasn't particularly clean. We took the previous day high. Okay, that's fine. But, you know, again, there wasn't really anything for me. And then today, you can see here, we've gone straight for this low. Haven't quite made it down here yet, but we look like we're now trying to attack that high there, which is actually creating a lot of liquidity. Look at that. So, you know, relative equal highs, a lot of wicks. There's going to be a lot of resting liquidity up here. But at the same time, there's a lot of liquidity building up down here as well, guys. But let's, you know, take it down, see kind of where we are with it. Now, if you're, I'm just trying to see where we were today, because the first thing you need to kind of look at is structure. Where are we overall on structure? We can see here, we are very, very bullish. Okay, we're very, very bullish. First thing to note, guys, 4-hour candle. So this price action hasn't happened yet. I'm gonna delete today's price action so we can see it all play out. But 4-hour candle. Okay, and then you can even refine it to the 1-hour candle. So we can bring that down to the 1-hour candle. Price action came down, started pushing higher. So I wasn't looking at this during London session or anything like that. I looked at the NAS London session, but you know, with this pair here, I'm always playing around this on New York session. So, you know, looking at a 15-minute time frame, first thing that happened, I'm just going to go to 1:30, and I'm going to identify my range by picking up 7 a.m. as well. So look at what happened. You know, where we were. This is why I like this pair so much, because this happens a lot, and this is what we have to always take into consideration. London session, if I turn the sessions indicator on, okay, so first thing we did was take out this age. So if we, you know, kind of just randomly, let's just say we're here, because I'm not coming on for London session. I'm not having a look at what we've kind of done in London session. I'm not interested in any of the trades that potentially played out. So obviously we've got the Asian session, which we like to highlight from the 7 a.m. I mean, that's technically down there. And then we've got the Asian high as well. So this is Asian liquidity. A lot of liquidity in these areas here. You can see that we were doing the same as what we were doing on NAS. We're starting to reject. We were coming a little bit lower. And then London session did exactly the same thing. Now, obviously, overall, we're pretty bullish. We've got this lovely internal liquidity, which is resting right here, especially after it took out this external liquidity right here. And if you don't know what that is, guys, go back to the videos on internal and external liquidity, because there's some really good ones in the mentorship videos. So we can see prices there. We're inside our 4-hour candle, which is here. Price is coming back to this. We're looking for price to come to this 1-hour candle. Now, this killed 2 birds with 1 stone today, because obviously we've got the range, which is playing out here, and you've got this high range here. So, you know, liquidity is on both sides, and it looks okay. It's obviously been expanding to the downside, but trying to balance itself out. So we really need to be kind of paying attention to what's going on. And what can we see? Price dropped up at 1:30, completely dropped to the downside, and stole this liquidity here. Not only did it take this liquidity, it hit this 1-hour candle, immediately started to reject. So, you know, we can have a little look. We can see if there's any opportunities and things like that. And what we were faced with, okay, what we were faced with is, I'm just going to jump this back to about here. Okay, the same thing has happened, and this, a lot of people get confused, because now what we've done, we've taken this liquidity, okay, we've come into this 1-hour candle, and we've immediately expanded. Now, a lot of people get confused, guys, because what's now happening is We've taken that liquidity, we've expanded, but there's no break. For me, there's no break. Okay. Now what I can see is obviously we expanded. This is the high, this is the low. Again, what's stopping us now coming into this candle and then dropping down? Absolutely nothing. Okay, so we could easily drop. So this imbalance here is high risk. And then price obviously pushes higher, breaks above this area here, and there isn't really an entry. So who was it? Was it TM? Was it you that was asking about there wasn't really anything claimed? And is this what you were looking at, Tian? If you don't mind me asking, is this kind of where you were? 5 minutes showed a lovely buy model after sweeping London liquidity. Yeah, the 5 minute did definitely from here. But let's just pay attention. So for the 1 minute, okay, there isn't really anything going on at this moment in time. Same for me. I couldn't see anything on S&P. That's fine, Alistair. I'll show you exactly what the entry was. Okay, so let me just slow this down. When you start seeing this, you obviously look, we want to try and, where's the target? Well, obviously we've got this liquidity to go for up here now. All this liquidity here. We've got pockets and pockets of liquidity. We can see we've broken structure. Now, price could come back down to here. Now, I'm not going to set an entry for price to come and fill this imbalance. Let's delete that. Okay, because price has come down to here. For me, personally, again, this is just me personally, I would rather wait for this price action to reaccumulate, sorry, to go higher from here again. Because price, by this time, this imbalance has been left, price is expanding very, very hot, fast. And when price starts to reverse, for me, you know, there's a lot of reason for price to come lower if it starts coming lower from here. So I'm not as interested. But when we start seeing, you know, what's kind of going on from here, what can we see happen? Okay, if anyone notes anything. So price rejected, rejected, rejected. We hit this area here. Okay, this candle here is important. Price expands. Again, we did kind of break, but not really, because that's a pathetic candle. We're not interested in that area there. Okay, this imbalance looks appetizing. It's obviously a type 2 accumulation model because we haven't actually broken, but we have left imbalance. There is an entry in there. For me, I'm not interested. Okay, for me, this imbalance which is created here is actually your entry. Now, this isn't particularly clean but there's a lot of confluence in this, and I'll show you what I mean. Okay, because price came in and really, really gave it some. Okay, really, really gave it some before it started moving. Who here would be looking at this entry here and having a heart attack if you're inside it, especially if you're on a funded challenge? Would anyone here be thinking, oh my God, what is going on? Because what I'm about to show you is going to hopefully really help you. Okay, I was in this earlier and I was really confident this was going to play out. Okay, and actually it started to play out. Now, entry was up here. Stop loss was, I think, a little bit below here. The reason this had no business, let me just get rid of the sessions. The reason this had no business going any lower is, yes, you could argue we're creating liquidity. Of course, we're creating a lot of liquidity there, but price isn't going to close lower than this candle right here. Look at this block right here. This is an area of resistance. This is an area of support. Price is not, look here, it's incredible. Price is refusing to close lower than this candle. Price closes lower than that candle, you're getting stopped out. But when you see the wick coming in, and by the time all these wicks were here, honestly, you can walk away from your PC safe, knowing, yeah, this here's doing its job. This is the algorithm doing its thing. Price is going to respect this area. So hopefully now, if you can identify these block areas here, and you see, okay, yeah, this is happening. It's a bit stressful, but trust the process, guys. Trust what's going to happen. Okay, and you know, entry here, you could have your stop loss here, or you could have it here to be conservative, you know, or you could have even had your entry, you know, maybe somewhere around here at the bottom of the imbalance, you would have had a higher risk reward, but you might not have been triggered if it obviously was like that NAS one. You know, where are we looking to take this target wise? It's just that liquidity there. That's all we're interested in. 1 to 3. It can go higher. I think it did go higher, but you can see here, price eventually started doing its thing and breaking away. And it's actually quite funny. It's not funny, it's amazing. So this is the entry here. We actually have another entry right here. Again, price expands out of this area into this imbalance right here. And again, what have we got here? This block candle right here. Price will not close lower. This is why I put my stop losses below the candle. It's why I put my stop losses below the candle and not below the lows, because when I see these breaker block areas, I'm confident that price isn't going to come any lower, especially if we're bullish. And by the way, guys, we're very bullish. Price has accumulated in our 1 hour and 4 hour point of interest after sweeping liquidity from our daily trading range, which we look for. So this is extremely bullish. This is a very, very high probable setup right here, right here. These are really beautiful bits of price action. I understand there's a lot of heart attack movements going on with a lot of wicks and things like that. That's because there's no news. And a lot of people are forming opinions in the markets. A lot of people are taking entries against each other. They're making moves against each other and things like that. And that's why when you see all these wicks, it's an indication that it's kind of like a no high impact news day. But these areas still play out every single day. The chances are, if there was high volatile news and you know, more of an excuse for price to move, it would have been probably less wicks and less opinions. 100%, Rachel. It works on Forex. Any pair. I mean, look, this is just flown. So if you held on to that, that's an 8 to 1. I mean, I didn't. I was literally just to the top there. But literally, you can see there, it took out the Asian liquidity. Really, really good target. So yeah, guys, let me get rid of this. I mean, at its highest point, an 11 to 1. So every single time people ask, you know, how many times have people gone break even here? Or how many times have people taken small losses and not trusted it? You see these areas, you see it play out, but you have to wait for the perfect situation. Okay, this expansion happened, left this imbalanced entry after it reacted from that candle right there. You know, price reacts from this area. It could have taken this liquidity under here. It could have, but this is just price action doing its thing. It's not going to come any lower. If you're nervous about this entry here, just bring your stop all the way down here. So if you ended up taking this entry in here, just bring your stop here. You might have less risk reward, but profit's profit. You get a 1 to 2 every day. It's 10% a week. 10% a week. So Tian has said, I was on point with everything, just couldn't find a confident re-entry. Frustrating watching that go to the moon. But Tian, now you've seen it, do you get it? Because this happens every day. So don't feel bad that you didn't see it today, because you'll now see it tomorrow. I struggle waiting for TP to hit. I took a trade today that hit TP and my dad was telling me to wait, but I panicked, so I would have been up more. And it just comes from experience. I was literally non-emotionless to this because I trusted it. I can see this. You know, don't get me wrong. When it was kind of floating and it went back and it went down, I was a bit like, oh, maybe this won't work. But once it started coming up to here and down, then I started looking at this candle here and I thought, yeah, okay, yeah, price is going to be fine. Price is going to be fine. And that's the thing. And that's the beautiful thing, guys. You don't need to target big areas. Like, this is enough of a target. You know, I'm not being funny, but if you get 1 to 3 every single day, that's 15% a week. I'm not saying you're going to win every trade, because you're not going to win every trade. Of course you're not. No one's going to win every trade. This is obviously dream la land. But if you are looking for the highest quality setups every single day, okay, you are going to have a higher win rate. If you are using proper risk management, you are going to be fine. and you're going to make money, a lot of money, a lot of profits. And that's what's so beautiful. I mean, looking at where price is now, my opinion, again, I'm not always correct, is, you know, we got imbalance down here. Maybe it's coming down to there to just go higher. But realistically, if I just go up to the time frame and delete everything, we could go either way tomorrow, in my opinion, because we've got the previous day low, which was never taken. We've got this previous day high. It would make more sense for us to go higher because we're very, very bullish. So yeah, let's see what we get with there. Do you always let them ride to TP? Yeah, but Rachel, the thing is, where was the setup? So my setup, wherever it was, I don't even know where it was. So everything right here. So I'm only targeting liquidity pools that I know will happen. So if I go, you know, I'm just going to bring this all back quickly. And that's my 7 a.m. Get rid of that. So this is the liquidity here. So if price is starting to accumulate, bear in mind this was a 1 hour candle. I'm happy with my risk reward. That's a realistic TP. You know, I didn't wait for price to go to the Asian liquidity or anything like that, but I could have, but I'm not. If I've got like a 1 to 3 or a 1 to 4 or a 1 to 5 or even a 1 to 2, and I always judge price and think, yeah, this could go either way. Now I'll come out, I'll accept profits, and that's the beauty of it. That's the beauty of it. And the way I'm taking my trades at the moment, I am rarely losing. Don't get me wrong, I still lose, but I'd rather, like the last 2 days, if I had have forced trades, I would have been on a losing streak this week. That's the thing. I didn't take a single trade on Monday or Tuesday. The price action was rubbish. It was rubbish. So I didn't take anything. But I'm also happy to let good trades go. Like the NAS trade earlier in London session, I didn't take it. I was looking at it, but I didn't take it because it wasn't really in my trading rules. My trading rules at the moment is stick to New York session. So that's what I'm doing. I'm abiding by them. So I missed out on potential profits there. But at the same time, I'm very strict in what I'm doing. I'm running this as professionally as possible. And that's the key there, guys. Hopefully that makes sense, and it's giving you guys a bit more insight. You was sorry, Alonso, I missed your comment. I was looking on the 15-minute and it never came back. Oh, so yeah, you was looking for price to come back down here. Yeah, and that's why, you know, I'm always looking for, you know, that on the 1 minute time frames, the 5 minute time frames, and yeah, just seeing what price is doing. If it starts distributing, you might get something happen. But then if we get a big expansion, the 1 minute timeframes do hold out, you know, on an intraday basis, especially if they're gunning for liquidity. You know, this will now reverse and probably come back to your 15-minute area, Alonso. Why is it now reversing? Well, let's turn the sessions on. Let's see what it actually did. It's taken out pretty heavy areas of liquidity. So it took out this Asian session. It's filled in this imbalance. It's come back up to here. So, you know, this is the expansion. It's taken liquidity, external liquidity. We're now coming back for some of this internal liquidity. So it might be that if we measure this trading range, 50% and lower, that meets your 15-minute time frame. So there's absolutely nothing wrong with keeping that area intact. It might play out, especially here, looking at the 1 hour structure here. It's now creating nice structure. So if we delete everything, you see here expansion, taken external liquidity. And again, guys, there's video on external liquidity and internal liquidity for you if you don't know it. But, you know, measure this trading range. That looks like a solid area. That's the area we reacted from today. We've had the 1 hour break. I'd be definitely looking in here tomorrow. Maybe, you know, ideally for New York session, maybe London session, we'll see. That's a point of interest. So that's the thing. It's always about anticipating the next thing. Targets, well, we need to take this daily high. So that would be tomorrow's target. That's what I'm looking at. And this is good because, you know, I'm literally analyzing for tomorrow now. So that high there, if we get something happen and all the good stuff we spoke about happens, at the times that we want it to happen. Hopefully tomorrow will be another good trading day as well. It'll make up for a really slow, crappy start to the week anyway. But guys, does that make sense? Has that kind of helped? Yeah, perfect. Tian, 100%. Alistair, yeah, great. That's perfect. So yeah, look, guys, I'll let you get on with your evening. Unless you've got any questions for me at all, guys. If you've got any questions, please fire them across. Please fire them across because I appreciate we've only really looked at 2 pairs today. Rachel, does 7 a.m. and 1:30, is it the same for? Are you talking about Forex pairs, Rachel? Yeah. I mean, so what we'll do, I'll maybe next week we'll do the exact same session, but we'll do them on Forex. Does that sound all right, Rachel? I mean, what pair are you thinking of in particular? Oh yeah, of course. I would actually say the pound pairs I would focus more on the 7 a.m. vertical line through taking Asian liquidity to get a trade in London session, because the pound pairs are going to be very volatile during London session, or like Euro USD, things like that. I mean, you can see there, it kind of, I mean, look here, we had 7 a.m., a break above liquidity, and drops. And then what happens? 130, a break above the range, and drops. So yeah, they work. Maybe not like on the 1 minute. I mean, we'll have a little look. In fact, yeah, I mean, there was imbalance in there, but it didn't really break any structure. That's the low. I wouldn't have taken it, but yeah, these areas do work, definitely. We'll do some look. I'll have a look at the Forex pairs, definitely. So yeah, hopefully we'll be able to give you guys some help on there. GU, for instance, just took out Asian high and dropped. Yeah. Oh, London Open. Yeah. Sorry. Yeah. Yeah, absolutely. There's some really good setups, definitely. So yeah, it absolutely works, guys. It absolutely works on all pairs. I mean, I focus primarily on NAS and US 500 and things like that, because that's just the way I do things. But absolutely, the Forex pairs work for you as well, guys. So yeah, guys, what I'll do, I'll let you crack on. I'll get this video uploaded to the website. And if you have any questions, guys, as always, please reach out. Thanks for tuning in as well, guys. You've all been really, really good tonight. Really appreciate your questions, and hopefully you've gained a little bit more value. And tomorrow is going to be more of a confident day for you guys to succeed in this game as well. So if you need any help, guys, please, as always, feel free to reach out. I'm always here. I'm at the other end of a message. Okay, guys, any questions you've got, make sure you do ask. Don't go hiding as well, guys. Okay, so with that, I'll see you guys tomorrow.